At what point do you think Ethereum could take the number one spot? I mean, is that like a year, 2 years, like many, many years down the road, or how would you envision that happening?
Ethereum will go to 10 grand. It may even go up to about 25, 27 grand. But
You think this year though?
this year, yeah,
Oh
this
wow.
year it'll go up to that much. Um, but you got to realize that just because it's growing, well, everything else is growing with it. And
Yeah.
so you really got to focus on market cap, right?
Yeah.
And that's really all that matters. And when we talk about how big an asset is compared to another one, well, it really, the market cap's all that matters. Because Ethereum, if they go out and they create a bunch more Ethereum and flood the market with them, well, what does that do to the Ethereum you have? It's no different than printing money, right? It just devalues what you currently have. This is what's intrinsically valuable about a fixed supply coin like Bitcoin and a bunch of other ones as well.
So Ethereum's not a finite asset.
No,
Finite.
well, they will. They'll say we're only going to have this much, okay? And there's a lot of coins that say we're only going to have 50 billion, right? But then they've only released this much, and then they say, well, then we're going to go release a little bit more every. Like Dogecoin releases 5 million a day or something like that. I don't know. And the argument has to do with inflation, and I need to go look more into that. But at the end of the day, there's really not much, you know. The there's a reason that something needs to have a finite supply, and then there's a reason that it shouldn't have. Like Ethereum's a good example of it's a great asset to invest in because it requires gas in order to run. So it requires Ethereum to be able to send Ethereum, right? And so what ends up happening is a lot of it gets burned up or a lot of it gets redistributed, something like that. And so it helps kind of the what are known as the tokenomics, kind of the financial side of it. And so you don't have to steer away from coins that have not a fixed supply. From a risk perspective and a store of value perspective, for something to have a store of value, by definition, it needs to be something that is unique as well as something that has a fixed supply. Otherwise, what value does it have if you just keep adding more to it? And it can't store its value, right? So like, hey, I've got a lot of dollars. I'm not just going to get rid of all of them. I'm going to keep them, but that's not, I don't view that as something as if I put this 10 grand in my safe at home, I'll pass this down to my grandkids and they'll thank me. They'll be like, oh, I can't believe he only left us 10 grand. You know what I mean? It's losing its value.
Based on what we're talking about, future potential future values. Does it make sense saying, okay, well, if you think Bitcoin goes up to 100 this year, Ethereum goes up to, let's say, 20, does it make more sense to go after Ethereum where, it's at, let's say, I think it was 2,500 now. Obviously, 2,500 to 20,000 is a bigger jump than 30 to 100.
Yeah. So from a percentage gain standpoint, that's very logical thinking. This is the one factor you really got to consider, and it'll explain what you're going to do without even knowing it. So why don't you put the majority of your money in penny stocks?
Gotcha.
The valuation isn't there, right? It's almost like I need it to get more expensive, right, before I invest in it. Not because I wanted to throw money away. It's I need you to basically prove you're a stable company, right? You wouldn't invest in a company that didn't have a P&L or a balance sheet that was stable. Well, that's really what we're looking at in a lot of these cryptos. They have the ideas and the stock price, if you will, is just going up. They haven't produced anything. Dogecoin's, I think, the best example of that. They've literally done nothing, but the prices are going bananas. And it's like, it's so silly because it's like, you would never put money into a company that has 0 employees and they haven't shown up to work. No one's shown up to work for 3 years. You would never be like, I'll go put 10 grand in that, right? But for some reason,
that's what they did back in 2000.
yeah, exactly. But it's the exact same concept, and it's why it's going to be very similar to the .com boom and bust, right? It's uneducation. It's not being knowledgeable, and you think I'm going to get rich quick.
Yeah.
And the reality is you will get rich quick and then you will get, poor quick, right? Because you just don't know when to get out. The reality of it is this year specifically, it's really hard to lose because we happen to be in that part of the 4-year cycle where we see the big run up, right? And so it's really encouraging to be getting involved. And, I talked to a buddy. I did this exact same thing with a buddy of mine. I told him kind of some direction on what to invest in. You know what he did? He went home and bought something I'd never even heard of. And he put $500 in it and he turned it into $9,000 in 3 days. And I'm like, this is reinforcing bad behavior. Like, I'm so glad you made money, but here's the thing. If you don't sell it right now, it's all going to be gone. You're going to lose all of it. I convinced him to sell it. He took his profit $9,000 and 24 hours later, it dropped 30%. 2 more days later, it dropped another 56%. So getting in is not the hard part. It's knowing when to get out. And when you see something go that high up that fast, you should really consider selling it, right? Or selling half of it, that kind of thing. And so, yeah, there's absolutely some small projects to invest in. In fact, there's 3 that I'm really looking at right now to figure out if I want to get into them because I think they could have exponential growth, like really exponential 100x type gains. But I wouldn't put more than $1,000 in it, right? And that's a small percentage of what I invest in. So it becomes it becomes one of those things, right? Can you do it? Absolutely. But you have to understand the risk. You've got to make sure it's asymmetric, meaning that if I lose something, it's very little. But if I win, I'm going to win really big, right? Yeah. So the general rule of thumb in a bull year is just buy it when you can and sell it before the year's over. It's not that specific of a science, but at least I'm getting people to entertain the idea of selling it instead of just holding on to it forever.
So is there a point this year or maybe in the near future that you can envision where you would liquidate all of your, let's say, Bitcoin or Ethereum?
Yeah, absolutely. So as we get closer to certain price targets, we're going to be actually kind of laddering out, right? Okay. And so as we start to take profits, I might sell 10%, 20%, something like that, knowing we're probably going to hit this price target. And so I'm willing to, like, let's say Bitcoin, for example, I'll probably only sell half of my Bitcoin. I will always hold a chunk of it that I bought in the past that it's my retirement basically. You know what I mean? You really don't need a ton of it for 20 years from now, 40 years from now. And if the market was to shift, right? Let's say Bitcoin really starts to lose its momentum in market cap and just other projects step up and start to take its place. Great. Well, then I will move those profits over to something that's more sustainable. I just don't see that happening in our lifetime, but will it happen? Yeah, probably.